Welcome to the 40 Finance channel, everybody. Today we're going to be digging into the top video game stocks on the market today. We're going to put them across the board on some fundamental analysis and try to get a feel for what is the best investment today for ROI purposes, taking a look at the fundamentals as well as the growth rate and where we think these stocks could land, say, over the next 12 months. Reminder as always that my stock picks and projections are just my opinion for your entertainment. However, if you like stock comparisons like these, please subscribe to the 40 Finance channel. Give this video a like. Thank you to everyone for all your support. All right, so for this comparison today, we're going to use two different tools that I'm a paying subscriber of. One is on Seeking Alpha, and the other is on TipRanks. For TipRanks in particular, I use it often on this channel, and you can find an affiliate link in the description if you're interested in learning more. What I've done here is chosen 6 of the most popular video game stocks, in my opinion. You have Unity Software, which is one I've talked about on this channel many times, Electronic Arts, Activision Blizzard, Take-Two Interactive, Zynga, and Roblox. And I like this slew of names because you have quite some diversity. You have Roblox and Unity, which are high growth names that are sort of new to the market in the form of IPOs. You have EA, Activision, and Take-Two that are sort of established players. Then you have Zynga, which is also an established player. They kind of offer that great entry-level price with a share price in the neighborhood of $10 or $11. So what we're going to do is really just look at metrics across the board. Then I'm going to take, let's just say, 2 finalists and stack them up side by side and just offer my opinion on which one I would buy as my favorite video game stock for 2021. All right, scrolling down here on Seeking Alpha. Seeking Alpha sort of offers 3 different types of ratings. You have their quant rating, which is basically their AI view of a stock's fundamentals. Seeking Alpha author ratings, which is basically like I'm doing here. Anyone can write an article on Seeking Alpha. Some people's opinions are more popular than others. And then official Wall Street analyst ratings, which are kind of the folks that you see featured on CNBC. Now, because Unity and Roblox don't have much in the way of fundamental GAAP earnings, and they don't have a very long track record being on the market less than a year, the quant formula just doesn't apply to them. There's not enough data. But if you look across the board, you've got pretty much neutral for 3 of the 4 names. The bearish indicator is Take-Two Interactive. On the author ratings, mostly bullish. EA and Roblox get a neutral view. And then from the Wall Street side of the coin, bullish across the board, but Zynga and Roblox both received very bullish on their consensus estimates. Scrolling down a little bit further, only 2 of these stocks offer dividends, which isn't surprising because of the high growth industry. If you are interested in dividends, though, it should be noted that Activision beats out EA Sports in terms of yield percentage, both forward and trailing 12 months. All right, now let's take a look at the fundamental valuations. We have non-GAAP PEs projected for fiscal year 1 looking forward, 2, and 3. And just eyeballing it across the board over the next year, you have EA coming in at the lowest for the fiscal year ahead. Looking ahead to fiscal year number 2, it remains to be EA, but Zynga gets a little bit closer, and so does Activision. Then you go out 3 years, which gets harder and harder to project, but the standings sort of remain the same. In fact, it does take Unity about 3 fiscal years looking ahead before they start to produce a non-GAAP PE worth measuring. All in all, from this, I would say that EA is going to be your cheapest valuation technically on a forward PE look. It's hard to tell how accurate some of these 3-year look-aheads are, but this is the data that we have to work with. Skipping down to GAAP forward PE, this would be the next 12 months. It actually switches in Activision's favor. I talk about GAAP versus non-GAAP a lot on this channel. And if you go by GAAP metrics, Activision has the lowest forward PE. Non-GAAP forward PEG ratio looks like it favors Activision. They were the only ones that qualified for this. Not sure why EA didn't have one. Current price to sales, keep in mind this is a trailing metric. It does not project the future. But on a price to sales view, you can see that Unity and Roblox are far and away the highest. Activision comes in sort of higher on the second tier, and Zynga is the lowest. All right, now on to growth metrics, and this is obviously a very important part of the equation, particularly in the video game sector, since we know that that category is growing. And, really across so many platforms, once you include mobile phones to the kind of traditional PC and console gaming, growth is a very important part of the equation for your investing dollars in this particular category. Revenue growth year over year, trailing metrics, Unity and Roblox and Zynga are definitely the stars of that area. Now, revenue growth forward, which is arguably more important, you have Unity and Zynga coming in at 33%. Roblox, it doesn't mean that they're not going to grow this year. They just don't have a projected forward revenue growth. And then when you get into CAGRs of 3 years and 5 years, hard to project Unity and Roblox because we don't have enough data. But look at Zynga off to the side. Looking at quite a bit of revenue growth from the CAGR formula over the next 5 years. Now, on the positive side for Unity and Roblox, you do have EBITDA growth year over year, crushing it, right? Plus 165%, plus 180%. That is far and away above the competition. And you had EA actually take a step back. Activision is the best of the second tier, and Zynga is also negative in there. As far as profitability percentages, gross profit margin looks like Unity, EA, and Activision are sort of top of the class. Then you get into Zynga. The Roblox one is kind of surprising at 12%. It's actually low enough that I'm curious if it's even accurate. The other thing that could come into play on a number this low is if Roblox poured a lot of resources into their gaming universe here recently, and that obviously would have affected profit margins, but ideally been a good sign for the future. All right, looking at the balance sheet over the past 12 months for all these companies, let's just go with total cash. Looks like all these companies have a decent chunk of cash on hand in the billions of dollars in each case. On the debt side, Activision has the highest amount of raw debt at $3.61 billion. Now they also have the highest amount of cash. So that is a positive sign. And when you spin it into percentages, it's interesting that Unity Software, you could argue, total debt to equity percentage, is sitting in the best spot, while Zynga and Roblox are sort of the laggards in this category. Taking it a step further, if you get into long-term debt versus total capital, you've got Unity Software and Take-Two Interactive as the leaders, and the outlier in that category is going to be Zynga, coming in at 32%. All right, so on pure fundamentals, a lot of these companies are very close to each other. They really are. And there's a big X factor with Unity Software and Roblox because you don't have that historical data in terms of earnings per share, things like that. So they miss on a couple areas where you simply can't project what they're going to do in the future. Now, with that being said, you can dig into earnings reports, get a feel for what the company is issuing as guidance in the future. But we've seen a lot of empty fields in those worlds over this past COVID year because companies are often hesitant to say, we think, sales are going to be here and profits are going to be here. Coming out of that fundamental study, I would say that most attractive to me would probably be Activision for core fundamentals. You've got to like Unity for the growth prospects, and Zynga as well when you start to factor in their share price versus how much growth they have projected in the future. So now let's take a look at TipRanks to see what the best performing Wall Street analysts think about these 6 stocks in terms of upside today over the next 12 months. All right, and TipRanks makes this easy with their stock comparison tool. Come down here, we've got our 6 names: Activision, EA, Unity, Take-Two, Roblox, and Zynga. And you kind of eyeball down the line. You've got Activision plus 21% consensus target, EA plus 14, Unity plus 33, Take-Two plus 11. Roblox actually has some potential downside. And Zynga is coming in, I guess, second place to Unity as the name with the most upside from Wall Street analysts. All right, so I'm going to take our top 3 names in terms of upside: Activision, Unity, and Zynga. And we're going to go a little bit deeper and see if we can choose what might be the best investment over the next 12 months. All right, going deeper into the analyst ratings on Activision. Looks like we have several updates over the past 20 days, buys across the board, and almost every analyst has a price target of plus 20% for this company. The one exception here is a plus 5.62% from Laura Martin. So despite all the ups and downs we've seen here in the market lately, most analysts agree that there is still upside for Activision. All right, now looking at Unity Software, we have a few updates that are less than 30 days ago, a couple in fact that have come in the past 12 days. We'll stick with the freshest since we've had a lot of market volatility. You do have buys across the board. A 125 and a 103 price targets are the most popular here. Not nearly as much coverage with Unity as you saw in Activision, but the analysts who are following it do see some upside for the stock. All right, let's check out Zynga. Here it looks like most of these updates have come in the last 19 days. And just like Unity, you have a limited coverage. We've got 4 of the best performing analysts coming in, all with buys, price range between 13 and 15. So that gives you anywhere from, call it plus 24% up to over 40% if things go really well. All right, so we've got a lot of data coming in both on the fundamental and the analysis side for these stocks. I chopped it down there at the end to 3 names that I thought scored the best across all the metrics that we used today. Those were my 3 targets using the data that we had to identify as the best prospects over the next 12 months to get ROI for your money. Now, of that lot, if I had to choose today, I would probably choose Activision, and that's only because it has a much better earnings track record than we've seen from Zynga, with the X factor being that Unity has a very limited track record. And if all things are being consistent in this wacky world of volatility that we're in now, I'll take a company that has an earnings history, strong growth prospects, and even a small dividend to boot. Now, if I was going to go riskier and bet almost completely on growth, I've bought Unity before. I sold out of it when it took a nosedive. I am looking to get back into it for the long term, But right now, the thing that is very difficult with Unity software is its lack of fundamentals. That didn't seem to matter for a lot of stocks last year because everybody was growing revenue. But if we take another notch down into a bear market or a flat market, in those cases, I would say the lack of fundamentals that Unity has to support its stock price of about $100, that could really come back to bite you, certainly over the short term. Now, 5 to 10 years from now, I think Unity is going to be a major player and they're going to build into an excellent, profitable company. But if it's just for today, out of the bunch we looked at, I'm taking Activision Blizzard. All right, guys, let me know what you think about these video game stocks. One note there that I almost included Sony in the mix, but at the end of the day, Sony's a really big company with a lot of different pieces, much like Microsoft is to Xbox. So I think that the 6 names that I chose are more firmly rooted in video games to produce revenue and profit for their company. So that's why you didn't see Sony on the board. All right, if you enjoyed this, please give me a like and subscribe. Thank you to everyone for your support. We'll see you on the next video.